The dire financial health of Britain's high street has not stopped Ediston Property Investment Company expanding its portfolio. The Real Estate Investment Trust has just completed a successful capital-raising exercise which helped it acquire 4 retail parks. The result is a big jump in the Trust's assets, from £174 million to £318 million. It also means it now has a 16-strong property portfolio, spread countrywide but with a bias towards retail parks. Major tenants include blue-chip retailers B&Q, Tesco and Marks Spencer, which should be strong enough to survive any fall-off in sales caused by a dip in consumer spending. Edinburgh-based Ediston Property, set up in late 2014, is designed primarily to deliver shareholders, a mix of institutional and private investors, a steady monthly income. Indeed, bar unforeseen hiccups, it plans to increase the annual dividend next year by 4.5%, from 5.5p to 5.75p per share. Bruce, investment manager, is quietly confident that the trust can continue delivering an attractive income. He says, "The portfolio is providing a good income, and with the new properties we are acquiring we have the opportunity to improve this income stream." This can be done, he says, through renegotiating leases, striving to get vacant properties occupied, and tenant engineering, where tenants are encouraged to downsize or upsize. The precarious state of the high street has led some property analysts to state that UK retailers are facing a perfect storm of higher interest rates, rising inflation, stagnant wages, restricted credit availability and continued uncertainty over Brexit. Indeed, insolvency advisory company Begbies Traynor says nearly 45,000 retailers are currently in financial stress. Bruce accepts conditions are tough. Indeed, the Trust's portfolio has some exposure to distressed retailer Toys R Us, a retail unit on the Kingston Retail Park in Hull, but not on the store closure list. Bruce is keen to point out that any negative impact on the Trust's income will be minimal. He adds, if the rent reduces as a result of the terms agreed for the company's restructuring, it will be equivalent to just 0.6% of the annual rent of the trust. It has done this by avoiding big shopping centres. Instead, it is concentrated on well-situated, out-of-town retail parks, where shoppers enjoy free parking and access to an array of retailers. Everything from tea through to coffee. Outlets.Bruce says such outlets are proving more resistant to any downturn in consumer spending by allowing shoppers to pick up items bought online, so-called click and collect. Unlike many rival commercial property funds, Ediston Property is listed on the stock market. But it has never had to shut up shop, barring investors from redeeming holdings. Apart from the investment trust, Ediston manages the other property portfolios, bringing total assets under management to some £670 million. The trust's shares are priced at 111p.